Wake up, motherfucker.
All right, what's up? What's up, guys? It's June 9th. All right, so I'm going to review what I said yesterday. Okay, so let's go. Let's get to it. Let's review what I said yesterday. And you will see. You will see exactly what should have happened on Monday, happened today, which sucks. Which really sucks because it wastes a lot of time. Um, options have time limitations. So by it having to have happen on a Tuesday, we wasted one full day. We've also are now in a weird spot. That's not good. That's not what you want. Now you're sowing doubt into people's minds. Is that the? Let me see. So you see this thing right here? No, I'm not buying over here. So this is semiconductors, okay? I'm not buying here. This is not the place to be buying. You don't want to buy in here. This is the end zone. Or not the end zone. I mean the 50-yard line. Okay, this is the 50-yard have. Like this is the top. This is the top. Here's the bottom. If we did this in the morning, right? We did something like this, I would have bought here. This is a great place to buy before Oracle. Oracle has earnings Wednesday after the close. If I buy here, like I'm not going to get much, right? I'm not going to get much. It might just roll over again before Oracle, and then after Oracle, it bounces or goes further lower. It's like no, 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 no. Can't trade that. I don't want to trade that. A lot of the times when you want to do short-term trading, it has to be at the right price. Now, if you're doing options, you might have more room to maneuver. You know what I mean? Like if you got in Friday, you would probably be okay, perhaps, because I bet a lot of the options going down. Well, yeah, a lot of the call options I assume we're getting really cheap at this point at the end of Friday. Um, or if you did after the close, the market went down a little bit more. I think so. Like I said, look at those two lines, right? The two dashed red lines here on the SOXX that I drew. 524, 518, somewhere around there. It's well below the 531. And if you look at the thumbnail today, okay, if you look at the thumbnail, that's exactly what happened. So here, let me get my thumbnail here. Oh, very annoying, right? So this is the thumbnail for today. Look at that. Look at that. Right where it was supposed to be. If this happened on Monday, we wouldn't have wasted time. Look at how long it took to get down there, though, today. We popped up in the morning, trapped some people, tricked people, basically. So people that shorted yesterday probably got out. They got scared. They got out. They probably got out. And then once those people got cleared, then it started rolling back. Tricked you. You shorted yesterday, you got scared right in the morning, and then you rolled over. Rolled right over. And then it just kept going and going and going because we're in a negative gamma regime right now. As long as this whole action happens below that dashed line, look at it. It just, or that dotted blue line. Look, it just went right to that dotted blue line, went a little bit over, probably scared people, and then just went right down, right back down. And then it had to take all the way below the blue line, right? People got greedy again. They probably thought like, oh, this is going to be easy. It's going to keep going down. Nope, nope, nope. Tricked you. And then it goes back up after it hit that. And then where did it end? It ended at the dotted blue line next to that 15-minute purple moving average. Right there. This is not tradable for swings. This is only tradable during the day. This is only good for day trading. The whole environment right now is just geared towards day trading. If you're not into day trading, you can't do nothing here. You can't do nothing. I'd rather have it puke, completely puke, flush everybody out, flush it all down. Get all the toxins out of your system because you guys got greedy last week and then you didn't follow through. So the market already proved that you guys can't lift it anymore. And now you're just kind of fighting in this regime and we're going sideways. We're just going sideways. Like I said, we're stuck here. This is very good for you guys who want to practice your day trading. For anybody that wants to practice other types of trading, like swing trading, trades that can last a week, 2 weeks, right? Like we had before, it ain't happening no more. It's over. You have to wait for all this stuff to clear out of the system before we can move on up or down. I don't know which way it's going to go after we're done with this, right? If we do go up, we're just going to go up a little bit, however. We're probably just going to barely get to 7,700 in the S&P, maybe get closer to 8,000 or something, trick people even further, late June, early July, get to that point, and then we just roll over, completely fail as we get towards August. And that's yeah, all right. I think you guys got it. I think you guys understand what's going on here. Okay. Which chart is that? No, this is semiconductors. This is semiconductors. That's semiconductors. So the one I showed you yesterday was 78 minutes. Okay. The one I'm putting now in front of you, right? So the blue box is the 78 minute. And then I put it next to this 15-minute chart right here. So I just zoomed in. Okay. And that's it. That's what you see. That's exactly what I wanted to happen Monday morning. Was it to get here? But we wasted 2 days just goofing off in this crap. If we just completely puked Monday morning, it would have been an easy trade. You would have got in long Oracle, Planet Labs, Rocket Labs, whatever you wanted. And you could have rode that all the way before Oracle reports earnings. But it didn't happen. It didn't happen. So now you just don't know what's going to happen, right? You really don't know because we close right back at the middle point, right back at the 50-yard line. All it does is like, oh, you go to the top. Okay. Now you go to the bottom. You go to the top, you go to the bottom. You're just changing possession of the ball. The Bulls over here, the Bears over there, the Bulls over here, the Bears over there. You're in a range. And because everything happens so quickly, you have to do day trading. You cannot swing trade this thing. It's too dangerous to do it overnight. Unless you're doing futures. If you're doing futures, I guess you're fine. You could trade nearly 24 hours on futures, only 1 hour close every day. You could trade. But I don't think any of you guys are up for that type of trading. But you can see, right? Everything has an environment. Once you see the environment is not good for a certain type of trading you particularly like, you won't do it. So before it's like, not really interested in too much day trading at all. Now it's just like all about day trading because you can't do nothing swing. You can't do nothing swing because one day it's up, next day it's down. One day it's up, next day it's down. What you gonna do with that? Nothing at all. You got to wait until it completely clears out. Probably you're gonna have to wait for Oracle plus SpaceX plus Kevin Warsh plus options expiration. And even after options expiration, you don't even know if it's completely done because you got to wait for the quarter to finally finish. There's a lot of people that will trade all their shares at the last trading day of the quarter. So for trading day, start at market open, assess direction, jump in, or no, that's exactly what you have to do. And you should also look at how it's entering it too. You should look at how it's entering it. So you got to look at pre-market, futures market. You got to look at it. You should also like analyze the overnight. So the Asian markets into the European market, see how it's behaving there. You know, you could see right away there's a range or there's like some trend being built overnight. And then from that point on, you see if that holds or it collapses. So yeah, that's all you can do. That's all you can do, which sucks. That means a lot more work, right? You see, you have to do a lot more work. You can make a lot of money really quickly if you get it right, but you have to put more homework into it. Everything like day traders always prepare. Like, so each day of the trade, they do their homework the night before, they analyze things, and they prepare. I don't like that. I don't like to do that kind of stuff. Unless it's really obvious, right? Unless it's really obvious. If it's really obvious, sure, I'll do it. Like on Friday, it was obvious. It was like it was already slammed below these areas, and it was just like, okay. And so you have to know your levels, you have to know your levels. All right, so let's pull up the chart and go from there. Okay. So that's what I said. So when you do this so much, when you look at charts all the time, you recognize it right away. I don't need to learn options to do this, right? Okay, I can see the levels. I see what it's doing. All I need to do is look at the chart and be like, okay, okay, okay. It's worth my time. All right. It's not worth my time. Forget it. Move on. Don't need to do it. You don't have to take every trade. You don't have to do everything. So you can. Most people, I would think, like would just chill and relax, not care, wait for the conditions to improve to where they want. So yeah, if we just look at here, so like I said, for futures market, I use 5 hour. So after one day, I use 5 hour chart, and then after 5 hour, um, you divide that by 5, you get 1 hour, right? And then that's it. That's what I'll be looking for. So if you looked at back at Friday over here, you could see. So this was during the day. Okay, this was during the day. We were moving up on Thursday. And then after Thursday's close, it just rolled over into the Asian markets. European markets didn't do nothing. The US markets went flat. So it was building this range. And then what did I say? What I say was like, if you were doing futures, you could have shorted here. Okay, you could have shorted here. You could have shorted futures here. If you don't trade futures, or you use like options, and you can't trade more than 30 minutes before it opens, you're really out of luck. So I guess you could do overnight trading if you're Robinhood or Charles Schwab, interactive brokers. They'll let you do some shares of some ETF, some stocks. They'll allow you to do overnight trading. You could have got in here. But for the most part, most people would have to wait till here to start shorting. So that's dangerous because it could have easily on the open could have went up, tricked people, and then went down, right? Most people got lucky. Like when it opened, I just got in and said like, well, 3% I'll get out. So 3% I'll get out. That's probably what would have happened there. So today, let's look at what happened for SOXS. Let's say that somebody shorted yesterday. So this is where they would short, right? Somewhere around here. And then it opened up here. Somebody would have panicked. I'm sure they would have panicked. They would have been like, holy shit, it's going up again. Get out. And then it waited like about how long? Let's see. So I pull up my 15-minute here. So it took about maybe 30 minutes before it chose a direction and went down. Yeah, took 30 minutes. So within those 15 minutes, if they set their stop over here, they would have got kicked out. They would have got kicked out. That's probably what would have happened over there. So you can see how dangerous it is. If you can't get in the right price, and that's why Tuesday was terrible for any direction. If you want to be long, you have to be here. If you want to be short, you have to be here. But yesterday's action didn't give you any of that. I don't know what the options market looks like. Options would be really different. So I'm not sure if like in the options market you could have bought a put or sold a call, and it would have been okay for the price to move up over here without like destroying your, this move is huge for an option. This might not look like a lot if you just like use the leverage ETF or something, or inverse ETF, but this would have been huge for an option. So I would think if you shorted here, and it moved like this, I'm guessing a lot of people freaked and panicked and got out before it just decided to go roll over. That's why trading is tough. If you can't get the right price, the right positioning, you're taking a chance. You're taking a big chance, a big gamble that you would be kicked out, you would be stopped out before it actually went the way you planned it to go. Okay? So here you could have went long for sure. No problem. You could wait until Oracle tomorrow. You could easily have done that today. But you have less time now. You get in here, you wasted about half a day today. You wasted a whole day yesterday. And now it's like it's just barely going up. Like that sucks. That really sucks. That completely like ruins the whole plan. I'd rather have it like do this on Monday morning and then bounce strong right into here. And then I would choose to hold, okay, because I'm very comfortable because I bought down here. And I would take a chance that it would just wiggle before Oracle's earnings, and then Oracle earnings push it further. If I'm wrong and Oracle is bad, it just rolls back over here and I probably just get out. That's it, you know? Or I could just sell. I could have just sold today and got out. It would have been over here. From here to here, I would have got something. But no, it didn't do that. So now you're just confused. You're like, well, I bought here, but now it's just barely over here. It's like at that same 50-yard line area, right here in the middle. So tomorrow it could go anywhere. Tomorrow it could just do this or do this. But when it flushes everything out, it's clean. Everybody knows what it's gonna do. You have huge volume come in. You have everybody scared. You want everybody to be scared. Everybody was already scared Friday. You want them to get more scared on Monday morning so that you clean out the system. You purge the stomach of all the sleeping pills, and it would just bounce like really strong because we're in a negative gamma regime. Negative gamma. So any action below this dotted line, okay, is negative gamma. But I didn't need to know that because all I did was I looked at the chart and I saw that this bar is significant. This level and this level. I drew this for you like last week and I showed you again yesterday. I didn't need to learn options. I didn't need to know anything. But this level and this level I know is important. And look at what it did. It just went right here above to that top level, went right back down through here to the thick solid blue, and then it ended right here at this dotted area. So I think we got the picture now. We got the full picture that this is where you want to be bullish. This is where you want to be short. And then everything in between here, this zone here is no-go. You can't decide anything here. Okay? Pretty simple. Pretty simple. But it's terrible. It's terrible for trading. I don't like that. I don't like that stuff. Like you see it with gold, you see it with everything else. Like you hear, like you look at semiconductors here, it was terrible, right? This whole area was sideways, boring, dangerous. What were the stocks I was telling people to get in around here? It was oil. Oil was going up in a straight line. And then once we got the war, it just went up like more in a straight line, right? No problem. Oil was pretty good from February to March. Okay. And then after that, we went to software. And then, if you wanted more, you got into semiconductors and tech. Basically, tech went in a straight line. And then we just got trouble during options for last month over here, stopped it a little bit. We got a little bit further up after we got through the options, and then now we're screwed. Now we're screwed. We couldn't get a little bit more. No. The options market decided, sorry, you have to wipe out all this delta or whatever they call it. So you got the gamma, you got the delta, and all this is caused by that. And so I don't like it. I want all these people to stop messing around here, get all the options cleared out, go back, reset the board. We have to wait for the reset. And that's why it's acting the way it is. Yeah, I'm not sure I know specifically what and how to analyze. You can look stuff, but then have a different take. Yeah, that's exactly right. That's why you have to have no bias. You have to have the most minimum amount of bias. That's the problem. That's the problem with this game, right? And I've looked at so many charts that I've experienced enough of these markets that I already know what's going to happen. And I said we're going sideways. Once that Friday stuff happened, sideways. And it's right. We are going sideways. Sucks, but true. I've seen this enough times. I know what's going to happen. um it's all about experience. The more you experience things, I mean, it's just like dating or anything else, right? You know a woman right away. It's like, okay, that's a BPD, that's a BPD whore. Okay, forget it. I mean, that's funny because like everybody in Boyd has all been talking about like, oh, this and that, psychoanalyzing everybody, and it's like, come on, dude. Charts in themselves, stock market in themselves is also a psychoanalyzing game. You have to determine the mood of the stock market at different points in time, and when you look at the shape and form of these candles and things, I think you will have a chance of guessing what something is going to do. You won't be exactly right, but you are probably most likely will be right. It's just the same thing with analyzing anybody, because I mean, I'm not going to know everybody's mind, right? I'm not a mind reader. And everybody is complex in their own way, but they also have common patterns that repeat, and you'll see it here over and over again. And that's why this market this year has been very good for teaching people things. The market last year was very boring. There was nothing to teach. After you got that huge drop in April last year, it's just going up. Um, that's it. You didn't need to know anything more, right? When you bought that April to May, it's like it's pretty much a straight line in the market. So you look here in the semiconductors, very, very little that you needed to study. Not crazy. The only crazy move was in October, okay, to November. So Halloween. And the reason this happened over here was probably exactly the same reason we had this move here. We had the same conditions. We had the same conditions in the option market. The option market got set around here to show that there was some extreme dispersion, okay, between the single stock and the index level. And the same thing happened again this time. Okay, but we don't know when the bubble is gonna pop. We just know it's going to pop. And November it popped, but I don't think anybody cared too much about that one because the market wasn't really bubbly. It was very strong, but it wasn't bubbly. This one is a lot worse, right? Because here you see the semiconductors have taken over. They're now 40 to 50% of the S&P 500, so they have a stronger influence than they did last year. Because software has been weak, right? Software in the tech sector has relinquished any control of how it influenced the S&P. It's all about Nvidia, Broadcom, TSMC, Micron, Intel. Like, it's crazy. It just completely flipped. Like, software has very little influence, and it's all concentrated now in semiconductors and those optical stocks, right? Those optical stocks too. So, and now Dell and IBM or whatever is like trying to get like HP, Dell, like IBM, like they're all trying to like start uh, influencing more of this move. So this is kind of dangerous, a lot more dangerous than October. I don't know if it's just going to be like pretty pretty calm sideways motion, or is it just it's going to be more violent? It's just going to be like this and this and this. If it starts acting like that, no, 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 no. That's very challenging. You turned up the difficulty level a lot when it's like basically like a bear market without the actual crash. Um, the bear market by itself can be very hard to trade because you have big moves down, but then even bigger moves up before going down even further. That's really bad. If it just starts like getting more volatile like this and the range just expands Yeah, I wouldn't touch that thing unless you really knew what you were doing. It'll become really hard for you to guess. Oh, okay, that's a bottom. I'll trade it up. Okay, that's a top. I'll trade it down. You might get screwed over very quickly. So that's why most people they just stick with bull markets. When it gets to a bear market, they don't like it. But we're in a really weird point where volatility is going up with the stock price. So it's been helpful so far. So far, it's been helpful. So I guess that's what's been happening since um, late April. So on up here, it's kind of been acting that way. But it might be over now, right? It might be really over as we get closer to options expiration. It looks like it's done. It's done. Too bad. It's really too bad because we don't really know what's going to happen after the options expires into July. And then once you get to the summer months, like um, yeah, I've usually seen tops happen around July. Okay, when you get really good Aprils and Mays, you get really like solid tops over there. Okay, so last year it was fine. You didn't have to worry about it. We went sideways. So you see, after we hit July over here, it was just okay. It was just okay. So if I just pull up the SPX. So semiconductors went sideways, but you see the S&P was still going up. So we didn't make a top over the summer. We just kept going up. Very nice, very clean. Don't need to talk about it. But that's because semiconductors wasn't the biggest influence in the S&P. Okay, every stock except for a few places, some lithium stocks, some real estates. Most of the real estate was bad, like went sideways. Bank stocks, finance stocks, like sideways, not really good. But overall, it was not a big portion of the S&P, so it didn't have a big influence of it. So when Oracle went down and the semiconductors went down, look at how much influence it had on the overall S&P. Not much, not much. So this was like 3, 5, 4%. Maybe if you want to do this top to that, maybe 5%. Okay, that's kind of bad, but not too bad. Okay, now that semiconductors is a bigger part of the S&P 500, look at what happened now. Now it's like you're scared shitless because just the semiconductors going down 10% push this thing down 5% now. Like I was telling you last Friday, that's not good. That's not good. There's too much concentration risk. If anybody wants to kill the market, all you got to do is keep attacking semiconductors. You keep attacking semiconductors, it goes down 10%. This thing goes down another 5%. People are going to flip out and go crazy. So that's why it's a lot more dangerous here. The bubble needs to keep going. You got to maintain this bubble to keep going up into July to be safe. Otherwise, I suspect by the time we get to August, yeah, this thing will just roll over terribly, terribly. So, whatever's coming into October is going to scare people, which is good, which is good for buying stocks again. So if you were just looking for something to get into, oh, that would be the day I would be buying stuff. I would be buying a lot of stuff. Yeah, but anyhow, oh man, terrible, terrible. Fuck. It doesn't happen the way you want it to. It doesn't happen the way you want it to. Okay, so let me look at this option stuff here for you guys. Oh, let me see if I got it. 3M. Do I have it? Okay, I got it here. All right. Here. Okay. And I don't want the 78 minutes. Okay. Okay, and then I put this in line. Okay, so this is the options market here where we have dispersion over core 3M. Okay, so if you don't remember what that means, it was hey, let me get the image up again. Let me get the image up. See where I put that. That's why you got practice now. You gotta recognize certain things in the market, practice where you can, because you gotta get used to this type of stuff as we keep moving along in the coming 2 years. You're gonna see more and more where it just flips around and goes from this mood to another mood to another mood, very quickly. That's a Trump style market. So when you look back at like study 2018, study 2019, study COVID, if you look at those different types of markets, it's exactly the same way. It was kind of that schizophrenic, moody, changing behavior at any moment. So nope, not in that one. Okay. Let's see. Nope. 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 Man, it should have been yesterday's, right? No? No? Huh, weird. Let's see. Was it in this folder? Let's see. No? Okay, I guess this is not up to date, but this is fine. That's fine. So that middle panel, right? So I showed you guys this middle panel, and he put like the dispersion over core 3M. And the last time we were this high was back in July of 2024. I showed you another chart where Goldman Sachs showed like this happened. They used another one. It wasn't exactly this, but that one showed three peaks. Um, this one is missing the one from last October to November, so it missed that one. This one would have missed that one, but it's all about options. This stuff is just options derived information, and so that's what I've shown here. Okay. Okay, so let me see. Okay, so let me get rid of that. Okay, so back to this. Okay, so that middle panel, I basically repeated it here for you. Let me just get rid of this. You don't need that. So right here was the last peak of July 2024. And I guess you could say this is a peak. I don't know, October last year, 2025, but there was some other data that had a bigger peak over here into all this one's not really obvious, right? This one's not that obvious. I mean, I don't know. Are these the ones you have to? I don't know. These are not like very obvious. Okay, this is obvious. This is like what? This is gonna crash, and that's what happened with the yen carry trade. That's what crashed. All the tech companies crashed at that moment. It was Nvidia that started the ball rolling over here. And then now here we got like Micron. Micron is the cause of this one, right, probably. So this one's Nvidia caused this one. Micron caused this one. And yeah, I don't know what else to say. Like I would rather Monday we had a big crash, scared everyone in the morning, and then by the time afternoon happened, it just wiped it all away. So if that happened, we probably could have had this thing go back down here at least, somewhere here. But now it's just dangling. It's just dangling up here. This is still high. This is higher than this. This is higher than that. So I would say there's a big danger that we could still crash in the coming days. If we just puked everything out, if we just puked it all out on Monday, that would have been for the better. That would have really been for the better. And I would be more optimistic that we would just bounce and keep going up. No problem. But because the way it is, I am going to assume that the options market is not done messing around with us. That's it. Are you still holding on to all your position? Yeah, I'm just still holding on to it. I mean, there's no choice. There's no reason for me to be scared, really, right? The only thing that I would be saying now is that, like, you have to get used to the day trading environment, because until this thing gets reset and we clear out all these option idiots, expect only day trading. Okay, but anything that I bought from the last 2 weeks, I'll still keep because I bought them at a cheap price. There's no reason for me to run away, right? I bought them 2 weeks ago. I would just still keep them. If you didn't buy them at a cheap price, you're kind of afraid right now, I assume, right? So that's why I say you gotta get in at the right price, because if you do, you don't get scared with all this craziness. People are kind of getting worried. They're getting worried now. They're looking at this and they're going like, "Oh, I thought it just goes up. I thought it just goes up." Changed regimes. We've changed modes of doing. We no longer have this. You guys want it just to go back up here and just continue on up? Sorry, not happening with all the options. It's gonna block you here, and it's gonna block you here, block you here. That's the problem with it. Until something happens that will set the tone and say like, oh, we should be down here now. That's when all the options get cleared out and the new range is over here, right? I don't know if it's gonna do that. I don't know if it's gonna do that. I don't have that sophisticated of a crystal ball right now. And even if you do have one, I'm assuming you have to be paid a lot of money to be right. You're gonna need a lot of nerds to figure that out. A lot of mathematics, and I don't even know if that's even guaranteed to help you. Look at Sam Bankman-Fried. Look at him. Sam Bankman-Fried was a smart guy, but he couldn't figure out how to win in the end, right? If Sam Bankman-Fried didn't get killed in Bitcoin, he would have been rich. He had all the AI IPOs. So he took people's money when they bought into his little cryptocurrency. I guess now you could say it's a scam, but technically it wasn't really a scam if you won. The thing that he did that was messed up was he took people's money and invested it in things that he didn't tell those people what he was doing. The same problem that Martin Shkreli made people money. The problem was that he did it unethically. If Sam Bankman-Fried didn't get killed in Bitcoin with that crash because Bitcoin caused him to get a margin call or something, he ran out of liquidity. That's the problem. Because his money was tied to Bitcoin. All that stuff was tied to Bitcoin. That caused the problem. So if you guys remember, let's see, it was here, right? It was during this time. It was the crypto bear market. So this last flush over here, these last flushes over here, it destroyed FTX. His FTX got wiped out because like he couldn't fund his positions anymore, and they all called his margins. So he got a margin call or something like that. I don't know if it was really a margin call, but it was. You could just think of it like 2008. It's just like, dude, I have to close my positions because I can't maintain it. So that's probably what happened to him with FTX. Had this thing not happened and it just went sideways calmly before going back up, he would have been fine and nobody would have cared. And all that money that he quote unquote stole from people, that he put into like AI companies, IPOs, private shares, they all would have went back up anyway. Bitcoin survived, it went back up. And with that, his money would have been okay, and all that money invested in AI would have been worth like billions upon billions. There was somebody on Twitter that showed the chart. It's like, had Sam Bankman-Fried had his positions did not get forcefully closed, all the people that put money into him would have been fine. Would have been completely fine. And they all probably would have made a lot of money right now. But it didn't. He's in jail and all this happened. So finance is kind of like that tricky game. It's so tricky because it's going in a straight line. Straight, nice, orderly line. They have zigs and zags, and this zig and zag killed him. And that's where you don't want to be. You don't want to be in this position here. This is a zig and a zag, right? This zigzag could be really bad now with the way Bitcoin is. Michael Saylor's got all his Bitcoin in there. It's just like, sorry, buddy. We're gonna go down here, crash and burn MicroStrategies. And MicroStrategies might be in such big trouble. Such a big trouble. I've seen some theories where they say like the way the MicroStrategies set up their interest rates, and because they actually have to pay interest on some things, they have some interest rate products, and it looks like it's going to be hard to maintain very soon once this thing just goes down, and he could go bankrupt. I don't know. All the people that put money into his little thing are gonna be like gonna turn into FTX 2.0 or something, and yeah, that's it. So it's not easy. This is not an easy thing to do, and that's why looking at charts helps you out, right? You look at the charts, you look at the cycles, it helps you out. No matter how much math you know, you just can't perfectly predict this. You just can't, huh? You can't perfectly. Well, maybe you can though. Maybe you can. We showed you with the cycles. Maybe you can kind of like have a better chance of predicting something, and where you want to be. Okay, we had a good run right now because all the semiconductors followed the late March to June call. So that's the bullishness of those 2 months has been completed. We have completed. It is over. Um, it doesn't mean like if you pick the right stock, they won't go up anymore. It's just that the regime has changed. This thing has totally changed everything. It's not going to be easy that you pick anything and it'll go up, because before everybody could pick any semiconductor stock and it'll eventually go up. Like you saw ST Micro, a European semiconductor company that probably barely anybody knows about, started going up crazy. Nokia, people barely even remember Nokia. It started going up like crazy. So that's what happens when you get into the happy mode and it just keeps going up. That happy mode is about to be over. It's probably over. I'm not saying it really is over, but it looks like it could be close to ending very soon if this thing does not improve by next week. MSTZ looking like a buy. Not yet. Not yet. You have to wait for the bounce. You have to wait for the bounce. You got to wait for the bounce, I think, right now. There's probably going to be a chance where it bounces. I doubt it's just going to roll over and collapse. I doubt it. I doubt it. I just have a feeling that everybody is like thinking it's going to be a bear, right? So when everybody starts agreeing with me, I don't like it. It's just goes up over here and everybody started, bro, everybody here was so bullish, and then that's when I was like, no, it's not going to happen then, and we're going to keep going sideways. We went sideways again. Okay, we started going bullish. I said like, okay, this is it. See what happens. Let's see if we continue on up or not. It started rolling over 2 weeks ago. Not a good look. This is not a good look. And so now I had to wait for this to clear out last week, right? When the options for Bitcoin closed. And what happened after the options for Bitcoin closed? Well, the Monday after the Friday, it just went straight like this, down. Nope. Then it's over. It's over. I would have thought like if you want to be bullish, you should have did this, but it didn't. So now we're at the bottom here. So here I would be buying. I would be buying. Everybody now is bearish on Bitcoin and Ethereum. It's like too stupid. Everybody agrees with me, then forget it. It's time to go back up over here. Maybe if they're lucky, they can get over here, but then after that, it'll just go back down. Yeah, probably something like that. That's most likely what's going to happen. So I never agree with the crowd. If you agree with the crowd, you know something's wrong with your thinking. All the idiots are like seals. They all start clapping. They all start clapping at the same thing. You're like, nope, 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 nope. If you agree with me, then something is wrong with what I'm thinking, and it's time to flip. Always contrarian. I'm always contrarian. Um, I mean, it's not always true, you know. But for the most part, it's true. Yeah, for the most part, it's true. I remember like the April stuff with the tariffs. It was really funny. It's like all the liberals were like, stock market's going to keep going down. All the conservatives were more bullish though, so it was kind of hard to tell when the end was for that one, because it's like, well, they're both like crowds. They're both crowds, but they're just basing their opinion on the stock market from politics, which doesn't help me. Uh, yeah, that really doesn't help me. You're basing the stock market on politics, which is like, no, stock market. When you really understand the stock market, it doesn't really care about politics. Honestly, it really doesn't. It might care because of some um short term uncertainty, right? Like before elections, they don't know like how much of the Congress will be Democratic or Republican. But by the time they realize who's really owning it, the stock market finally adjusts and then moves on up again. And actually, the best times that the stock market performs are under the Democrat president with Republican Congress. So I think the founding fathers really understood how to build the political system here. They don't want one side of the branch of government to dominate the other. They always want a contested type of government. So when the government can't do anything, that's when the stock market is really happy. They want the government to be impotent. They don't want one side to dominate a policy. They want always conflict. So it's really unlike a parliamentary system, right? Like the UK or, I mean, what's another popular parliamentary system? I mean, France is like semi-presidential, so that's not a good example. Germany, not really sure either how well that one is. That's not a Westminster type parliament system. But let's just stick with the UK then. I would say, like, yeah, when a majority party takes over, it's like they dominate the whole thing. They dominate the whole thing. Um, but with the way things are with our government, we have like we have Congress versus the president. That's how it works. Yeah. And the judiciary is kind of like that third wheel that sort of influences things in a longer term way. But honestly, I don't think the stock market really cares what the Supreme Court says from most of the time, you know. And I think they kind of suss out what a Supreme Court will do. It's kind of like the tariff stuff. It's like they knew like the tariff stuff wasn't going to pass through the courts. But for the intermediate time, whatever Trump said pushed the stock market down for fear, because they didn't understand like how far Trump was willing to push the limit of what he was going to say about tariffs. But by that time, it's like, dude, you've maxed out how much you could tariff China. China essentially had 200% tariffs on some goods by that time. You had huge tariffs on the EU. It's like 25, 30%. It's just like, how much more tariffs are you going to announce? It's just like that was the end of it, and that was the time to buy. And after that, it was like the market just rolled right up. So it's just like the Iran stuff all over again right now. It's like, okay, So you had the war, you ran out of missiles, the strait is still closed. It doesn't matter what people say, the strait is closed. Oil is a problem. We already know that, but it no longer matters to the market. The market has moved on to other news, AI, 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 IPO, IPO, IPO. That's how it is. That's how it is. Um, so we have to see what bad news does for the market really now. How much bad news can really affect things? It probably has very little effect. Bad news is probably good news. You want more bad news, actually. It's kind of like COVID. You had the worst news possible. You locked down the country, the world, and unemployment was going up because people were afraid of getting laid off. The companies were getting shut down. You had all the bad news all at once. So any new bad news wasn't going to affect it. Every week we had larger and larger unemployment numbers, but the market kept going up and up and up and up and up, and people were getting pissed. They were like, look, it's getting worse. It's getting worse. But the market already sussed that out when it went down in March. It went down 30% already by that time. So it knows you are going to have huge unemployment. That's why it went down 30%. Um, you expect it to go another 30%, I guess, but the market was like, no, that's enough. We've gone as low as we think it should go, and the more bad news you give it, it's actually good news because now the Federal Reserve has to keep interest rates lower for longer. So bad news started to become good news. The worse the news, the longer the Federal Reserve kept QE, right? So that's what's happening. Like eventually the bad news starts becoming good news because the worse something is happening, the government has to step in to fix the problem. That's, I guess, the idea that the market is looking at right now. So we're going to have inflation. How is the Fed going to fix that? Will be the issue that the market will be looking at. What will Kevin Warsh do? If you have AI creating layoffs, how much does that impact the economy? There was a Moody's guy today that said like we were about to go into a recession. Great, good. More bad news, bring it. The more bad news you bring, the more the government will have to do something to fix it, right? So government intervention. So when you bring enough bad news, it eventually starts turning into good news because now the government's going to step in and bail people out. Social Security is running out of funds. Blah blah blah. Yeah, okay, keep bringing it. Keep bringing it. I think the only problem now is like, what are they going to do with the food inflation, the fertilizers? That's really what's going to happen. And the other issue will be like places like California, which can't get oil and use it from other places because our refineries are only using Gulf oil, which is dumb, but that's what happened. And Japan and South Korea also like have issues, which might affect the globe, right? So those are probably the bad news that have to be fixed somehow, and they're kind of hard to fix with government intervention. The government can't go in and unilaterally like fix those problems. Okay, the Iranian missiles already blew up all the refineries in what was that? Qatar. Yeah, they have to. It's going to take 5 years to fix those things. So that's not going to be. A government can't wave a wand and fix that. The other problem is like, what about the oil that's supposed to go to Asian countries? Can that be fixed by the United States government? Nope, it can't. I mean, we could try. We could try. We can export them. We could definitely export them, but that's a whole nother issue. So yeah, let's see. Can't do nothing about this. Gold went down another, right? Gold went down. Gold went down again today. Bro. Oh man. I don't know. I don't know what to say about gold right here. It's just like Bitcoin. It's just like what do you want to do with this? What can I do with this? Like there's definitely a chance that it'll have to do something. There people are very bearish right now. There it's just like Bitcoin, very bearish. There was some report from Citibank that said, "Oh, gold's going to go down another 20% easy, no problem." See, when you see people start talking like that means I have to get bullish on gold now, huh? Now you're saying, "Oh, gold's going down 20% easy, no problem." Okay, yeah, you're all bearish on Bitcoin, Ethereum, and gold when it's already looks like this. This is not how you do it. Okay, if you wanna be short, you got to short at the top of the range. All right, this was the top of the range. Now everybody wants to be like, oh yeah, it's so easy. It's down here. Of course it's gonna go all the way down here. No problem. I don't think so. Now you guys are all bearish. Now I have to go against you. I have to be the contrarian. So I think what's gonna happen is probably it might fake people out down here. It might make people think like, okay, this is over. It's end game. And so if this week into next week it does something like that, I would probably buy. I would probably buy because it's gonna bounce back up. It's gonna bounce back up. Okay, it'll probably go here into August or something, and then that will be the big. And then after that, it'll just collapse into October with the stock market when there's a huge liquidity crunch. Okay, it will probably do something like this. Everybody's saying 20%, no problem. No, 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 no. So you think we could go down here, huh? So 20% in gold probably means like 30% in the gold miners. I'm guessing because it's the gold miners will exaggerate the move, just like MSTR and all that will exaggerate Bitcoin's moves. So probably it will start dipping down here and people start freaking out. Yeah, but nope, it's not going to do that. Probably not. It's going to look like it's about to do that and then just reverse halfway through and then go up here before actually doing what you wanted it to do. The zig and the zag. Zigzag, zigzag. It's not a straight line. It won't be a straight line. Nope. So it'll probably we'll probably see. So if it's a weekly, let's see, it's so this thing will probably do like this. People probably get bearish over here. That's the wrong time to be bearish. It's too late to be bearish. You should have been bearish over here. It will start going back up. It will hit this and go back down. Something like that. That's probably what's going to happen. Yeah, that's what my guess is. So Bitcoin, Ethereum, gold, same scenario. They're all too bearish about it now. So it's probably not going to occur like that. All right. So anything else to talk about? Anything else? So let me look at Intel. How's Intel doing? How's Intel doing? I saw Rocket Lab hit my target. Finally. Yeah, I think this is good. I see no problems. My only issue is that it's a semiconductor, so it's very sensitive right now to what semiconductors are going to do. Right? It's this might not be done. So yeah, I think it would have been better if it did this on Monday. That would have been better. It just doing this thing now, I'm not sure. I'm not sure at all. Um, but I could definitely just see it just like, yeah, go do this, Oracle, Open AI, then Kevin Warsh finally talks, and then we get out, and then we're gonna go up to 200 dollars a share. So you could trade it. You could definitely trade it. I think it's just a higher risk. It's just at a higher risk right now. It's not going to be easy. It's a gamble, but if it works out, I think it can hit 200 by the first week of July. And then after that, we'll probably be going down from there. Semiconductors will give up by that time. Because Micron looks okay-ish. Okay? Uh like this thing here, that's yeah, I mean, I really hate this look. You know, this whole thing, you gap and crap. The whole gap and crap really sucks. Really sucks. Like you saw it, like NBIS and APLD had good news like overnight. They had announcements that they were going to build more, help build more data centers. APLD was up like 10% pre-market. NBIS was up 5% pre-market. But by the time the market opened, you see it just went up here, it just went. It's like, oh my God, really irritating. You're really irritating me. Like APLD could have been done. We could have been breaking out, but nope. The market decided, sorry, not today. We have to puke. See, everything would have been a lot better had we just kept going down on Monday. And then by the time afternoon rolled around, we were up. And then so today we will just continued on up. So the good news that we would have had on APLD and MBIS would have took us up over here. But because of the sequencing, the way it went, it screwed everything up. Everything up is screwed. Yeah. Have you looked at Tesla in a while? I hadn't. It looks like some consolidation. Tesla's so boring now. Tesla's so boring. Like everybody's moved on from Tesla. Yeah. There's such good stocks that it's just like I don't even bother looking at Tesla. Like it's just in a range, right? It's always been in a range. Man, like you see how many lines I've drawn on Tesla? Like ever since 2021, it's just not that interesting to me. Like there was a chance it could have broke out here. Okay, but no, no, no. You got tariffs, you push it down, it comes back up, it just gets to here. Semiconductors was way more interesting last year. It's just like, dude, Tesla. Oh man, look at this. Yeah, Tesla's not interesting to me. It has not been interesting for a long, long time. There's so many fish in the sea. Yeah. Oh, wonder if it'll pump with space. No, no, I don't think so. I don't think so. It's at the end of the day, it's just a battery company, a car company. That's basically it. Yeah. I mean, that's why Elon wants it to merge with Twitter X and open SpaceX, right? He wants all his companies under one name now. So there's a reason for that because I think it's going to be very hard to push Tesla up anymore. It's done its thing. All the major move was back here. That's it. The major move is over. There really isn't much to talk about with this stock. Um, let's see, BYDD. Why? So this is a Chinese car and battery company. I think there were some companies put on a list: Alibaba, BYDDY, the Costco. Not to be confused with the wholesaler Costco. I'm talking about the shipping Costco, the Chinese shipping. Okay. I don't think we have any OTC shares on that, maybe it's this one. I don't know. What's this? Why are there three versions? I got Singapore. I got this. Maybe it's this one. I don't know. This one, I guess maybe. But yeah, the Costco, COSCO, the Chinese shipping. I'm pretty sure you've seen Costco containers, right? If any of you guys go on the interstate, you'll probably find the containers being pushed around the country. They come off the Costco ship, they get put on there. That's where you get your Temu from. All right, so, but yeah, Costco, Alibaba, and BYDDY have been put on a list of government control companies. So Chinese government control, CCP control. So I don't know what that means. Like, what does that mean exactly? Is that something I should be considering when I'm trading Chinese stocks or not? I don't know. But let's look at Temu, PDDY. It's almost at the bottom here. So should I buy it? I don't know. So like I said, Chinese companies good to trade, terrible to invest, but great to trade. When you trade them, they're very nice. They're very, very volatile. Okay, you can see They have these nice jagged moves up and down. So you get these nice movements. You could trade them. So yeah, they get into modes we could try. Let me see. What was the one I liked a lot? I like this King Soft one. King Soft. King Soft. I like this one. King Soft Cloud. So KC. Yeah, I've been waiting for this guy to get out of its range. So you see, you get here, down here in 2024, $2.55. It just went all the way up to 17, 18. So I've been waiting, just like with BYDDY. I've been waiting. Are you done? Can we go up again or not? If we're ready to go up again, next stop is like 75. That's it. 75. Yeah. Oh, misspoke about Highland. They aren't e-car batteries. They are power generators for data that tap into tap into local grid. Yeah, I was looking at that. Yeah. It wasn't batteries. Yeah. I looked into it a little further. I mean, who cares? Who cares what it really does? It does something. All we care about in this show is mostly looking at charts, right? We're just like, what's this? What's this? The only reason I would care is I want to compare it to another company. So if I wanted to compare it to ChargePoint, that would have been wrong for me to compare because ChargePoint is completely different from this, right? So it's just like if I know it's Nike, I'm going to compare it to Lululemon, I'm going to compare it to Adidas, right? I'm going to compare it with other clothing manufacturers. If all the clothing manufacturers are going a certain direction, then I would be like, oh, okay, well, Nike is just following the other clothing manufacturers down. The whole sector is going down. So this one is probably more like Vistra or something. I don't know because it's kind of like data center infrastructure, sorta, kind of, right? So maybe Vistra is the one you should compare that one to. Uh, Maybe I don't know. This whole area is kind of dynamic. Not all of them do exactly the same thing. They kind of fill gaps in certain requirements. So I don't think there should be a direct comparison. But right now it's okay. It's still floating here. That's good. The only problem is like if you're worried that the market is going to puke, then yeah, there's a distinct chance that we could go down 50% on panic. If the whole market starts panicking, then a lot of stocks will follow that. Because this is a high beta stock. Okay, so we can look at this one here. So we can compare the high beta to the value stocks. Okay, look at this ratio. This ratio is high beta versus value. Right now, we've been doing okay. Okay, for the last month, that's fine. We've been doing that very good. But there's some weakness building in. It's starting to creep in. It's starting to creep in. So yeah, I think you want to hold this level here. So this is a ratio. So I'm using a ratio. So I'm comparing if high beta is very good, then low volatility. This is the other reason why when you look at it and you look at the April bottom here from last year, that's why, there wasn't anything to talk about. We were in a good spot. We were in a good position to keep being bullish. The only time it started to get bad was in January. You see, we started doing this. So that's the reason I came back this year because I was like, oh, look at that, it's going down, it goes up, and then it's starting to go down. Well, it's probably the top. We had a big drop here, and now you're slowing down. So when high beta starts slowing down, that means the market is not favoring tech anymore. And if tech is starting to weaken, then the market is going to start weakening. And this was around the same time when oil and gas were going up, right? So even before the war started over here, the market was already telling you that technology companies were not doing as well as value companies. Value companies are mostly like boring boomer stocks. And what's one of those boring boomer stocks? Oil and gas. So for some reason, oil and gas started doing a lot better late December going into January, and that was like ding 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 ding. Somebody knows something. Somebody is buying a lot of gas and oil, and that probably were like big boys building their position before the war. So maybe they knew the war was coming. Maybe they knew something else. Who knows? It doesn't really matter to me. Insiders that were buying a lot of oil and gas companies were doing it for a reason. We found out what that reason was. We moved on. Yeah. So, and then after that, everybody ran back into tech. You see, after that taco, it's just like, oh, okay, here we go. We're going back into tech here. Blah 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 blah. Go back into tech. So yeah. Might set an alert for KC. Yeah, KC is fun. KC is fun. I just don't know what it does though. I have no idea what it does, honestly. It looks like the worst kind of stock to buy if you're looking at fundamentals, I bet. I bet you look at that stock, you're like, "What?" That Canadian, if he analyzes that stock, will probably be like, "Hell no, I'm not buying that." But I'm just looking at charts, bro. The chart looks good. I don't know why it looks good. I don't I'm sure if I looked at the fundamentals, I would never touch a stock like that, but also it's a Chinese stock. So not only is it like a cloud company, it's a Chinese cloud company. Any point Xi Jinping might just slam the hammer down and destroy that company, but the chart looks good though. So what the hell? It's been working. It's been working so far. Okay, Twilio, still fine. Looks fine to me. Okay, how about Band? Still fine to me. Yeah, I had a bad day today, but I don't know. It's still above this moving average. The only thing I would be worried about is like it broke kind of like this very thin channel that's going up. So this probably is no good if tomorrow we just do this, If we just go straight down here, then it's over, right? But if it just does this, okay, we're probably fine. But I'm guessing it's going to start building a range. That's my guess. So this week we're probably going to start building a range. This trend is likely to be broken. Um, so yeah, I would probably expect that. So watch what happens after Oracle's earnings. That probably will really affect how things are here. Okay, what else? What else? What else? Anything? Rocket Lab. Yeah, Rocket Lab was good. Rocket Lab was good. Rocket Lab was good. We finally hit that target. See, I said like if we had another bad day in the Nasdaq, we're probably going down to $99.50. We got close. We got close. We got close. We got about the $100, right? $101. Pretty close today. So if you're looking to buy it, that's probably it. That's probably what you expected. Um, doesn't mean that the market won't puke and this thing could go down back down here and before it goes up. But if you bought some at 101, probably fine. Okay. This whole thing looks ugly now though. Very ugly. Like I said, it would have been better if Monday we had a quick visit to 99 and then pop back up here and then closed today over here. Instead, what you saw is that it went down a little bit, went up a little bit, went down some more, but closed, tried to go up, but then we closed down here. So, oh, this doesn't look very promising. Doesn't look very promising at all, So that's why you see all this damage right now. I bet you if we just did it all on Monday, all these charts would have looked better. But now I can't recommend anything to you guys. It's like, yeah, you could buy it, but I think the risk is a lot higher. It would have been better had it occurred the way I wanted it to occur on Monday, but it didn't. So I can't force the market to do what I want it to do, right? I can't do anything about that. It is what it is. Here, let me mention this stock here. MSGS, Madison Square Garden. So, since you guys like the Knicks, I don't know. I don't know if you guys like the Knicks. Who gives a fuck about the Knicks? Like you're all hearing about, like, oh man, look at the NBA Finals. Look at the ticket prices. They're so high. Well, this stock hasn't been an interesting stock until this year. So I'm kind of wondering, like, well, interesting. After the New Year's, it's like doing this. Is this something to be looking at? Um, well, yeah. It reminds me of the WWF WWE stock. It got bought out by what? The WWE got bought out by the UFC guys, right? TKO, that Jewish dude. So that Jewish dude owns like wrestling and the UFC. Actually, I do know someone whose brother is or used to be a spokesperson of the UFC, who then worked in the Trump administration the first time, got kicked out, then came back and worked in the Trump administration the second time around. So yeah, there's definitely some little relationship going on between the UFC and Trump. Like you saw, like people whining about like the little stadium he's building in front of the White House, right? For the UFC. Yeah, there's a reason why. There's a reason why. There is a connection, okay, between people in the UFC and Trump. All right. So there you go. So if you believe that there is a connection then with Trump, then why don't you buy some TKO stocks? Man, forget the Knicks. Go for this. I mean, Trump is in the Hall of Fame, right? The WWE Hall of Fame. So you got the wrestling and the UFC. Yeah, why not? This stock might be good for you. I don't know. I'm not going to say much about that anymore than that. I gave you enough information, insider information as I can, but I would say, like, yeah, maybe if you're looking for sports related stock that's not in sports betting, then yeah, maybe TKO is more your thing. Okay. So, anyhow, all right. Wonder if MCK is a buy. Kind of looked like one last week and still does. It could be, but because it's in the healthcare sector, healthcare won't start moving up until people really think it's a recession. So if you do buy it for long term, don't you don't need to rush into it is what I'm saying. Like you can test and buy a bit here as long as it's close to the 723 area, so you can test it out, see what happens. If it confirms and retest this again, and holds this level into next year, you can buy more each time. But yeah, this should be a slow moving stock. But there could be a point where when October comes around and the market does flush, there could be a chance that it's going to go lower and it will go to the next level here. So you see like these two tops here, this bottom, I'm guessing like there's a chance it could go down to 624 if the whole market goes down. When the whole market starts moving in one direction, it doesn't matter where you hide out, right? All the markets will go down. It just won't be like, oh, healthcare didn't go down as much as um, semiconductors, but it's still going down, meaning like you can get a better price some other time. So yeah, you could hold off into October. No, there's no rush. So you could buy a little bit now just to test the waters. But if it does break down below that 720.23, yeah, don't be surprised if you see it down here at 636. And if the market really has a problem, maybe it goes down closer to 530 or something down here. So yeah, that's why That's why a lot of these hedge funds and bigger firms, they're limited in what they can do. If even if they know there's a crash coming, they're told by their bosses not to go all in cash. They're limited. Think I said in the last presentations about that, I said 10%. I think that's the rule of thumb. They can't have more than 10% in cash or cash equivalent, meaning money market fund, T bills, straight cash. Like they're not allowed to do that. They have to be always be in the market. They're not. A lot of these guys are not here to time the market like we are trying to do. Right? You have a lot more freedom than these people. Um, so you can move everything into cash, everything out of cash. You can do whatever you want if you choose to do that. But most people, once you have a lot of money, you're told not to do that. So what you'll see is that like everything will start moving down. Okay, the whole market's moving down, but some stocks, some sectors will move down less than others. So if I start seeing like XLV divided by SPY, so this is what you will do. You take the ratio, you would look at XLV divided by SPY and go like, okay, if I want to buy healthcare, do I want to buy healthcare right now? Does this look attractive right now? No. So McKesson looks great, but the sector it's in looks horrible. So that means I'm not going to put a lot of my money in McKesson, even though the chart looks okay. That's what's going to happen. So a lot of these big boys won't put a lot of their money in MCK. Okay. MCK might hold 723, but because of this chart here, what I'm seeing is that people are not allocating money into healthcare. All right. So even if you look at Ozempic, right, with Eli Lilly or Novo Nordisk, right, Eli Lilly, Novo Nordisk, or any type of like miracle drugs they keep coming out, I don't want to be here. I don't want to be here. So do I want to buy this dip? This looks like pretty good. It looks pretty undervalued, but because the whole sector is bad, there's a good chance I could get a cheaper price in October. I could get to Novo Nordisk. I could get Ozempic in 27, right? Let's look at Hims. How about Hims? Hims looks better, right? So I was saying, like, if it held this line at 25, I would be a buyer. Yeah, but I'm not like a big buyer though. I know that it's in healthcare sector, so I know that whole sector kind of sucks, and there's a chance that it'll just go sideways anyway. So I'm not in a rush. I'm not in a rush here. All right. So maybe in October it'll just go back down anyhow and go back to 20. So I could buy it at 20. So there's no rush. There's no real rush here. So let's look at Eli Lilly, the best performing pharmaceutical company, I would believe. Yeah, this one's good. Very nice. Very nice. But do I think it's just gonna keep going up? Or do I more likely think it's just gonna retest this again? That's a good question, right? So based on what I see in the overall sector compared to the S&P, so I take the XLV divide SPY, it doesn't look good. This tells me that people are not allocating their money in healthcare stocks. So it's going to be a lot easier for this to crash down in October if the whole market goes down. So what happens is that when the S&P starts moving over, but you see this ratio go up, that means the healthcare is going down less than the S&P. That's when I go like, okay, it's safe to buy now. Because now we're breaking out of this and we're going up, then people are accumulating healthcare stocks. So that's the one reason I said to get into oil and gas back in February. Because if I looked at the ratio, right, this has been very bad sector, okay, since 2022. We've been going down. But if you look at here, it started improving, okay? And I was like, I look at the cycles, it looks good. I look at here, it's improving. So this week, right, on February, the first week of February. So I said end of January, I said start looking to buy UwU. And then that first week of February, what happened? We shot up. We shot up in relative terms, not in absolute terms, but compared to the rest of the S&P, this was a big signal that first week of February. That confirmed what I thought when I said at the end of January to buy oil. Okay, this was a lot different than these two, right? Every time it went up, it just went back down. Every time it went up, it went back down. The last time it attempted something was here and here. So this was like what, 2023 in October and April of 2024, but those two failed. So I was placing a lot of assumptions that late January into February over here, because I was saying like, well, the cycles look good. There were a lot of people that were buying the futures on the crude oil. So I would say like, yeah, I'm going to take a shot and say I would be bullish on oil right here. And so that's it. That's what you want to see with XLV. So XLV, that's what you want to see. Right now, XLV is not like that. So you can buy it, but you might be there for the long haul. You might have to wait another 6 months before you go like, well, is there something improving over here, right? So we could just look at this and go like, okay, healthcare stocks. So are we ready to go? Are we ready to go? Or is this going to go back down and we're going to have to wait another year? So you're just betting that in the coming 6 months, it's going to break out and then we're going to have a big move up. And so that would have been the perfect time to buy HIMS, LLY, yeah, all that other stuff. What do you think of HWM? What's HWM? Is that a sector? Oh, aerospace. So that's just a stock. Yeah, this thing is strong, right? So I'm assuming this. I mean, if it looks like that without looking at the ratio, this thing is already way too strong. Yeah, yeah. I mean, if you want to look at something, let me see. I remember there was this Brazilian, or was it Canadian? Embraer. Oh, man. I think this is Brazilian, right? Is it Embraer? Man, this used to be a good one. And I got stuck here. I forgot if this one was like, is this Canadian, Quebec, Canadian, man. I don't remember. I don't remember this at all. Yeah, this is Brazilian. Okay. Brazilian. Yeah, this one was like good. I mean, this had a really nice chart and now it's broke. It broke. So if you're gonna go HWM, yeah, I guess I see no problem. It just goes in a straight line, right? So looks fine to me. Looks fine to me. I don't know who's his competitors. Who are the competitors of this guy? What's his group? You have to always look at who it belongs. GE, RTX, okay, so defense, mostly defense. I think GE Aerospace is doing okay. RTX, I don't remember. I don't think that was doing good. Was RTX okay or not? Yeah, this one broke its trend too. Once we had the war, it was over. Everybody was already buying into the war. Now it's over. I mean, GE. No clue, honestly. I came across their chart randomly. Yeah, it's a strong chart for sure. Not sure why it just like looks that good because I know the other defense companies, aerospace companies are kind of like this. They broke their trend. See, this one broke the trend. EMBJ broke its trend. EMBJ is not a like a defense, but some of their planes are used in defense. And I mean, yeah, it's like I don't like ugh, oh, I mean, that looks good. That looks very strong. I would say that looks a lot stronger than most. If you look at other South American type of companies, let me see. Like, let me look at my Mexican cement stock. Let's see how that. Man, it's still stuck there. Like this thing wants to get into a new trend, but it's still stuck. So yeah, it's like what you have for a while. You have a good trend, and then it gets broken. You have a good trend that gets broken, but like this is obscenely strong, you know, this is very strong, and I could tell there's a lot of volume in it here, so let me look. Yeah, millions of shares. This is not like some dinky penny stock, so I can't say it's just because, "Oh, well, it's just a penny stock, so of course it's gonna act like this," but no, it has a lot of volume, I could tell that already, so there's millions of shares being traded. This is a serious company, and compared to the other defense aerospace type companies I've noticed, like this is quite strong. So doesn't look like it's gonna break. I don't think. See, spread here is very good. Green bars are a lot stronger than the red ones, and it's consistent. So sure, go for it. Yeah, sure. Just go for it. I mean, the last time we had issues was in April, and that was barely a dent. It was barely a dent in April. It's like, oh, tariffs? Oh, who cares? Who cares? We just go down a little bit here, just touch that, and then we reverse right back up. So, and you can see like it doesn't even like make a sideways range. Like the only range it made was here, and that was still going up, you know? Like this at this point, it looks like it's about to make a sideways range, right? Because there's a lot of red candles coming in this one that slowed it down, and so you're kind of getting nervous now. You're kind of like, wait a minute, is this is all this red candles, all these weeks of red candles, is that some kind of prelude of like, okay, it's gonna go down? But yeah, there's a lot of green bars on this earnings, right? There's a lot of that's a pretty strong green bar over there. I can't complain about that. Okay, yeah, I'll definitely put this on the list. I'll definitely take put this on the list. Here, let me add this one. I am quite curious now. Why is this one not not as bad as um the other uh aerospace or whatever you want to say. EMBJ, EBMJ. Okay. Yeah, I'll just get that. So it says specifically they do materials for engines and stuff. So they don't actually build the engines. So that might be the reason. So they do a lot of the parts. Huh. Interesting. So they don't do the finished products. Huh. See how PL is spilling through support? Yeah, it's dead. Like we talked about yesterday. Yeah, it's dead. No, I mean, if we had the puke on Monday, it would have been a lot better, but we didn't. So no, you got that kind of move, then it's over. It's over. I don't really wanna care about it. No. If Monday didn't happen the way I thought it would happen, then I'm not really interested. I want to see what Oracle and the SpaceX IPO does on Friday, and then from there we have to wait for Kevin Warsh again. So it doesn't matter. I don't think I would trade any of this stuff right now.
Mic on.
Yeah, okay. Nothing else then. Yeah, I think I'm done. I'm gonna show you the video with the options guys. So let's look at what the nerds say about this stuff. So this will give you some idea about the levels, and that'll be all. I think that's it. I don't think I'm gonna have to say anything else. Yeah, because I don't think I'm gonna tell you guys to buy Oracle or anything before the whole thing. Sometimes gotta open a new tab when it grays out like that. No, it's not the tab. It's just like dude, it's done. I mean, I only have 8 gigs of memory. Once it's that's it. I don't want to. It's like I'm over. It's like talking about like stocks all the time like this. I think you guys understand what it is. Okay, we already talked about it yesterday. I'm not gonna deal with it. It's just like blah. And I get bored. It's like, dude, just looking at charts all the time is fucking boring. I told you, just go for the easy plays. If Monday happened the way it happened, easy. You buy, you go up into Oracle, you sell, and you make money. But it didn't happen like that. Blah. Ignore it. Move on. Move on.
Coming this Friday, and Anthropic, and potentially OpenAI. Now, historically, when you have waves of IPOs of this size, it sometimes signals a macro market top or late cycle. Why? Because all these companies sense that the window's closing on good liquidity conditions, and they want to get their piece of the pie before the window's shut. But macro aside, the positioning has been speaking for itself. Now, we've been flagging in previous videos this spot up, vol up environment that we've endured for the last 4 to 5 weeks. In fact, the longest stretch I've seen in my entire career. Last week, this culminated with a major sell-off of the exact type that we've been warning about, because the market tends to collapse under the weight of its own call delta in spot up, vol up dynamics like this one. Now, it's cleared the deck. The positioning has been reset to a large degree for 2 reasons, both actual trades, but also the pullback itself has reset the vol surface in a new range. Now, whether this is the top remains to be seen, But over the next couple of weeks, importantly throughout the rest of the cycle, there are key levels to be aware of. Now, with June expiration on deck, let's go into positioning and mechanics so that you can be aware of the key levels and dynamics that are playing out right now to make more informed decisions with your account. First and foremost, the upside level of 7,500 was, broadly speaking, the top of the range. We overshot it, of course, but it was short-lived. And now, on the way down, one of the most important levels for the market is actually 73.5. As we film, the market's testing 73.5 again. Now, whenever you look at the dealer's position, the major short strikes on the left-hand side here in the red bars, these positions are hedges. These hedges often act as range boundaries. What we see time and time again empirically is that price will explore or oscillate within key range boundaries, finding its way to some balance point, which is usually indicated by market maker positioning on the opposite side. Market makers long options sold to them by customers. So price tends to trade within ranges created by short strikes and find its way to pin long strikes. So now with the market testing 73.5 on the way back down, the most important question is, what happens if this level breaks? Well, the positions give us more guidance here as well. If 73.5 doesn't hold for whatever reason, we actually have a much wider range to the downside, where a potential vol expansion can cause a sharper sell-off all the way to the 7,100 level. That doesn't mean that if we break 73.5, we have to touch 7,100. Don't think of it that deterministically. What it means is that there's a downside bias here. And if we're still going lower, the next major level to test is probably 7,100. But overall as well, as we move into the June expiration, next Thursday, June 18th, there is a balancing act in this range too. And it points to 72.75. So really, the way to use these levels and ranges is understand that in between all the major barriers, there is an attractive force. There is a landing spot that's kind of indicated by the positions. In this range between 73.5 and 7,500, should we hold it, then all signs point back to stability somewhere between 7,400 and 74.5, maybe around 74.30. If we lose 73.5 because vol keeps expanding, people keep selling, we're going to wind up exploring a wider range, but still having some implied balance in the middle, around 72.5 to 73.75. Just to be clear, I did not make these levels up out of thin air. These are dealer positions that you can see for yourself right here in VS3D. What you see here on your screen in VS3D is the market maker position, the net long and short.
All right. See, I told you that just reading charts. I just told you that I'm reading charts. See, I didn't need to know anything about options. I told you exactly what he said just using charts. I was like, oh, there's a range. If the range gets wider, it's going to do this and that. I'm just like, oh, here we go again. Yep. So that's why I really tell you, like, focus on your chart reading. That's the number one thing you should do because it's the easiest thing to do. Everyone has access to charts. Nobody is willing to pay what? How much is he charging? $500 a month for this thing? What insights will I get from paying this? Like, I told you what it should have done on Monday. If it doesn't do that, then I'm not going to play because I know it has to go to this level and that level on the SOXX, right? And if we get to those levels, then we have to wait to see if we break out, and from there we know what to do. So I didn't need any of this information here to tell you exactly that. I could see it right away in the charts. He's like, "Oh, you bounce here, you go in this range, and then maybe if you go below that, you go to this new range, which is wider and this and that." Oh, dude, if I pay $500 for this a month, if I pay another service $3,000 a month for another thing, how much better am I gonna get in trading? I think it's a lot easier just to study the charts and go like, if it does this, then I will do that. If it doesn't do this, I will not play and wait and keep waiting for a better opportunity. So my game is always waiting for the better opportunity. I'm not going to go and pay extra money to be like, well, okay, I got all this information. I have all these levels now. What you want me to do? That's the problem I have here. I think all this short term like thinking is really a waste of time. Like only play when the opportunity is the best opportunity. You know, focus your effort, focus all your money on the best opportunities, right? I told you the best opportunity was late March, early April in tech. And I didn't know it was gonna be semiconductors. That like hell, who knew that was gonna happen, right? I was like, fuck, man, okay. But overall tech, and then February to March, we were in oil. So those two were right, and that was the easiest thing to do. All this other stuff here is just like, well, I want to make money every second, every minute. Okay, you know, you're gonna have to see if like putting all that effort into studying this will get you more money. That's what I'm saying. It's like, and I know that a lot of you guys like, oh, like, are you willing to spend $500 a month for a little bit more information, a little bit more edge? How much edge will that give you to make you that money, right? I don't think you have spare cash to be trading all the time. So you have to make that decision yourself when you look at it. But like I said, I think a lot of the stuff you can get from just reading charts. Yeah, probably only interesting to me because I've got a lot to. Yeah, for the person first doing this, it's interesting. But I've been doing this for too long already. But even before that, I was already looking at the stock market anyhow, right? Since high school. So I'm kind of like, this stuff is like, it's background. It's kind of like, oh man, I'm not gonna be a finance guy. This like, yeah, it's boring, really boring. Because all you're doing is you're just trying to learn something to make more money. It's just kind of like whatever. Money was never interesting, and I guess that's why I've been a good trader, because I didn't let it turn into gambling. You know, if you're actually in this game just because you like the thrill of making money and the high of making money, yeah, that could be dangerous too. You know, it cuts both ways. Like you're interested in it, and so you're willing to learn more. But I think at the same time, you either end up like the guy who studies too much and then end up with nothing because your little mind can't just process every little detail in the market, and you're just going to get that analysis paralysis. You're going to get you're just going to get like confused. You're going to get frustrated, or you just become that gambler type where you're just always have to be trading. You're always looking for a trade everywhere all the time. Even if it's not a good setup, you just want to make money, and then you just start making stupid trades, and then all of a sudden you're just like not efficient at all in your trading. Like I'm always like the philosophy, trade less with very little knowledge. So kind of like the Wyckoff guy was saying, like a lot of people, they just, all they want to do is learn more and more and more and more and more. And it's just like, after a while, it's like, dude, you're diminishing returns, man. You're learning so much, but how much of that knowledge actually translates to more bucks, right? And you're just wasting time too. Now you're just studying so much that you spend most of your time trying to find the perfect setups. And it's like, there's never a perfect setup. I'm just looking for the good enough setup here. And Monday would have been a great, good enough setup if that happened. And you could see, like, I'm just like, nope, I'm not playing, dude. I'm not playing this day trading shit. So, yeah. Yeah. So you look at Planet Labs, you're like, ugh. Yeah. Yesterday I was like, ugh, look at that Planet Labs. If only we crashed on the morning, that wouldn't have happened. And then today, like, the Planet Labs just kept going down. You're just like, yeah, no crap. No crap. Because we didn't flush out the options. Probably a bunch of options from last week because of the earnings on Planet Labs, and now it has to reset the whole range of that chart. So he's like, look at him. He's just like, okay, 7,500. Okay, now we go down to 7,350, and well, if we go below 7,350, we probably won't go all straight directly to 7,100. We might just dance around in 7,235, and then maybe we'll go back up to 7,400. It's like, oh my god, dude, this sucks. I just want it to go in a straight line. I'm not here to go like, where's the zig? Where's the zag? Where's the zig? Where's the zag? There are people, definitely there's a lot of people out there that will trade every zig, every zag. Man, that's not me. That's not me at all. That's not how I like to trade, dude. I want big trends. Give me big trends. Give me a big trend. And we were lucky this year that we had two big good trends, right? One in oil, gas, and one in tech. And those two trends are now over. And now we have to figure out, well, I guess we'll have to wait until October before we find a good trend again. That's what I'm afraid of. I'm really afraid of that. Oh, really sucks. We can't short it now, too. It's too early to short. So even if you want to short like gold and Bitcoin, no. It has to bounce first. We have to zig before we zag. So that's what I'm saying. Okay. I think that was the only video I was gonna waste your time on. That was it. That was it. That was the only one I was gonna waste your time on. So I played that. Let me see. Do I have anything for the charts to talk about here? I might. Man, it would have been so much easier. Had we gotten through all that other stuff. But we don't know yet. We have to wait. Oh, the other thing too is that the funny thing today was that we reduced from 2 interest rate hikes. Now we reduced it down to 1. But the market still went down anyway. Isn't that funny? So I don't really think the interest rates really mattered, right? From Friday. If it mattered, why didn't we go up today then? If interest rates really mattered, then why didn't we go up today? So it didn't matter. It wasn't because of interest rates. Yeah. Guess it's a balance of when to tactically enter. Yep, that's right. Tactically enter. That's right. Versus continually trading. I don't like continually trading. I think that's inefficient. I think most people turn into gamblers that way. Humans are not robots. So if you want to be a continuous trader, I think it's better right now for you to study how to make a trading bot, right? So Kyle showed me that they've hooked up Robinhood trading to Claude, so you could AI trade with that. I've also talked about the data sets, $3,000 a month from Unusual Whales with all the option stuff to stick in there. So there are ingredients that you can make bots, better trading bots, and maybe that's where we have to head right now. But I'm focused on tactically trading. As a human, I think that's the best one, because you don't spend too much time studying anything and you make a lot of money. So I'm always for working with low effort. But if the bots can handle continuous trading in an effective manner, then sure, let it do it. But as a human, no, I don't think so. I think humans get too emotional. They get too many mistakes when you trade in the shorter term. Yeah, it's just not good for humans to do that. I think humans are just imperfect. But AI right now is not really perfect either. I already showed you enough examples where AI is completely failed. So it's going to take some work. Maybe it's going to take about 5 more years before we get something doable. Yeah. Path of least resistance. Yep. I think it's the most effective. That's what I found. I think that's what I found. Other people may disagree, right? But then other people are other people, though. So I've always been the guy that tried to work the least to make and get the most out of it. Otherwise, I'd just be always constantly making a business, or I just try to maximize my time, my free time. I'm not gonna do that. So let me get this damn thing. Ah, ah, ah. Where is it? Where is it? Okay. Yeah, you see, it changed. So now there's only one rate hike. So 125 basis point rate hike. So what happened last time? Like last time everybody was like, "Oh, yeah, 2 rate hikes. Oh, we're going to crash now. Bye-bye." That was the narrative. They were saying like, "Oh, it's because of this the market was crashing." Well, dude, now we're down to back to 1 rate hike. So how come the market didn't go up then? If you were telling me the market crashed on Friday because of X, then now we got negative X and the market still went down. So therefore, that wasn't the narrative that made the market go down Friday, was it? It was probably because of the stupid options. All the stupid options that people are using to trade, and now it just bit your ass. It just bit your ass. And we're stuck here going sideways because of it. So I blame the options guys. So all the options people, they're to blame. If people just stuck to trading shares, we would be okay. But no, not good enough. We have to trade options because we're greedy and we want leverage. So, well, if you want leverage, I got my leverage ETFs, and those leverage ETFs buys options too. So I guess I'm contributing to the problem by buying leverage ETFs, right? Every time I buy and sell leverage ETFs, it creates options. So, see, so this is what happened Friday. We have a 42.3% chance of having a rate hike in December of this year, 2026. Then April of 2027, we have a second rate hike. So 225 basis points rate hikes. So a total of 0.5%. So what happened now? We kept the December one, but now we're holding. So probabilistically, we're still holding. Oh my God. So that narrative is wrong. Debunked. I debunked it right here. I told you the interest rates weren't the real reason. The news wants to make a reason. The news always looks for a reason that something happened. So they don't know why the market did what it did, but they just tried to find the most likely answer because the only thing that changed on Friday, I guess, was jobs report and this thing, which created this thing. But now today, we went back to 1 rate hike. But how come the market still went down? So what? No, that wasn't the reason. That wasn't the reason then. It was options. So let's look at this thing here. VXV over VIX. So this is one of those things that what's his face? Oh man. Figuring out money. So that's the YouTube channel. That guy always uses this VXV over VIX, the 3-month volatility over the 1-month volatility. I don't know why he uses this ratio, but from what he says, anytime it gets above like 1.2 and then it goes below 1.2, so it has to go above and goes below, then okay, we're starting a crash. All right, well, if you look here on Monday, we got pretty close to 1. Whenever it gets to below 1, it's time to buy. So we were close to getting below 1. If only we crashed on Monday, that would have been like, yeah, that would have been the time to buy, That would have been the time to buy. But it didn't happen. Didn't happen. We got 1.0144 right here. And then we bounced. So is that a good place to buy today? I guess not. Even today, that dip is probably not a real dip. There's probably a good chance we're going to go down again. Sucks. This really sucks. So Not opportunistic. Not opportunistic. Oh man. So there you go. So that's another reason why I'm like really annoyed because like if he only crashed on Monday like we were supposed to, we would have got a better chance of just continuing on up. So this is the put to call ratio. So right now we're in elevated levels. So the last time we were like down in this area here. So let me zoom in. So this is a 50-day moving average of the put to call ratio. So when you get like a very low number here, that means we're very bullish. A lot of people are buying calls. The last time this happened was during the COVID bubble. So we had this huge little bubble here that finally exploded. And then we had to go back down to the bottom of that range, I guess, in the S&P. But we are here again. We've been here for quite a while since semiconductors decided to go, let's go up. Yep, let's go up here. If you believe that we are in the same position we were back in COVID, I'd say you are taking a big risk in believing that before Kevin Warsh speaks. You have to wait for Kevin to speak. If you don't wait for Kevin to speak and you assume that, you're probably in a bad position right now. If he says something that you don't like, I'm guessing the whole options market will just flush all the way back down. So that's another reason this is bad. This is not a place you want to be right here. So yeah, there's a good chance that if we don't go sideways and he says something really bad next week, yeah, it could go all wrong very quickly. The only reason you should be up here is if you have the Fed behind you. The Fed was behind you. That's why we had a nice run up during COVID. Now let's look at another one. Let's look at the McClellan oscillator and summation. So this is the one I use to look for potential crashes. Okay. So this one here. Let's look at it. Come on. Come on. So now we're below zero. Uh-oh. So my rule is this. Once you go below zero and then you go back above zero, that's when I start looking for trouble. So the second signal I need is for this thing to go below zero. So if this thing goes below zero and it starts going positive and this thing is below zero while it does that, yeah, we're going to be in trouble. So last time we had this signal was around here, right? In March during the invasion or the attack of Iran. But that was short-lived. Once he tacoed, we started recovering. The other time we had this short-lived thing was during the earnings crash after Halloween. Okay. So right now we're okay. This is well above zero. So we're kind of safe right now. But if Kevin Warsh again says some bad things, yeah, I'm going to have to be watching this guy. If this thing goes to zero after that, uh-oh. No good. No good anymore. So I'm giving you everything, all right? But I'm not telling you bullish or bearish. I'm just telling you, look at the conditions right now. The conditions right now are not as strong as the last 2 months. The cycles tell you that. The way the price chart moves are like that. The options market guy tells you like, ugh, looks like we're going to a range. Well, duh. I told you the chart is telling you that. And now I'm looking at all these other signals here of the stocks, how they move with the McClellan oscillator. So underneath the hood, how each individual stock is moving, it's weakening right now. It's weakening, right? So that's a problem. That's a problem. Once it crosses a threshold, yeah, then I would say it's done. It's toast. It's toast. There's no hope for the market to bubble up again. Okay, so we have to watch that in the coming week. So it's coming soon. Okay, it's coming soon. And we have Juneteenth next week too. So it's only going to be 4 days of trading next week. You got Friday off, which makes it shorter. And when it's shorter, that means the options market wants to hurry up and finish everything before that Thursday. So having less trade, that's why I wanted the Monday to crash. We have more buffer, we have more time. We wasted 2 good days with this nonsense. 2 days is a long time when your options are going to expire on a Thursday next week. Shoot. Bad. And the options market controls everything right now. The closer you get to options, the options market starts taking over everything, right? Everything. So what we're seeing now is all due to options. Okay. So I'll see you around. It's 2 hours now. Hopefully that gives you enough insight, and you could tell by my frustration that I can't make any money with this type of BS because I don't want to. I don't want to stick my neck out and get chopped up. This is what I call the chop zone. Chop zone. You could try to day trade tomorrow. So if we actually go down and go back below the ranges, then you could buy it, right? Semiconductors, SOXX down to what's 530, whatever. Yeah, you could try to buy it again. If not, do something else. I don't know. Just chill out, just relax, wait for a better opportunity. If we start moving up, then we're all hoping that Oracle doesn't kill the party. That's what I'm gonna be hoping for. But even Oracle today, yeah, it didn't go down as low as it could have, right? If we just did it on Monday, it would have been a lot better to buy. But yeah, Oracle's only going down to like what, to 205. It looks like. Yeah, that's not enough. I'm not gonna risk it before the earnings. But yeah, I'm kind of pissed that like the APLD, the NBIS, we had good news last night for both those stocks, and this morning it just like wiped both of them down. It's just like any gain we made was like nothing. It was all wiped out by the time like 15 minutes after the open. It's like, come on, dude, this is crazy. We could have been flying high. Very irritating. Very irritating. I might be looking at gold then. I might look at gold. If gold really does a puke, or Bitcoin, MSTR, yeah, maybe I'll go long. Maybe I'll go long those two. I don't know. Those are the only two that look attractive right now because they're so beaten up. Everyone's so bearish on them. It just like seems like a no-brainer just to try to get in those two, gold and Bitcoin, just to get a quick pump. But I'm not going to be telling you guys that I'm really optimistic that it can run up all the way up into next week and recover everything they lost the last week and a half. If it does, that's a good trade, but I'm not telling you that. I'm not going to tell you that. But maybe I will. Maybe I will do that. That's the only thing that looks good. Otherwise, I'll just be like, well, maybe I'll stick my neck out for Intel. Intel might be the one to go. But yeah, again, nothing there either. Anything else? Nope. Covered that. Good. Okay. Let's see. Some covered. That the IPO, the SpaceX IPO, they were saying it was like 4 times oversubscribed. I don't really know what that means, subscribed. So that means like a lot of people are rushing in ahead to make their pre-orders for the IPO, or what? on Friday, how that plays out. Let's see, nothing. Nope, nope. Nope. I'll just leave you guys with this picture. I think this is probably what's going to happen on Friday. If you don't buy SpaceX, it goes up. If you buy SpaceX, it's going to go down. I think that's what's going to happen. I think most people, that's what's going to happen. If they click the buy button, then it starts going down. If they don't click the buy button, it'll just start going up. All right, so there you go, guys. Oh man, that's the meme. Oh, they got the meme in Korean. How nice. How nice. Yeah. Oh, I don't know. I guess I'll have to wait and see what happens Friday. All right, guys.